Why would Apple, a towering tech giant, have to tip its hat to Google's Gemini? And why did this handshake push Alphabet to the $4 trillion mark? This record number didn't come from Apple alone. $4 trillion isn't just a figure on a ticker. It's a declaration of real AI power. Watch until the end, because this $4 trillion moment isn't a one-day pop. It's about AI power. Who has the model, who has the infrastructure, who has the cash flow, and who will win the next race. On the night of January 12, 2026, the market needed only an instant. One number flickered. 4T Alphabet, Google's parent company, briefly touched a $4 trillion market cap. It sounds like a symbolic milestone, but the real story is sentiment. Not long ago, Alphabet was still being questioned. Is Google falling behind in AI? Did it miss the early advantage? And then, with a few well-timed strategic signals, the narrative flipped. The first piece, Apple. Alphabet announced that Apple's next generation of AI models will be based on Gemini under a multi-year deal. You heard that right. Apple, the symbol of a closed ecosystem, chose to anchor its AI on a Google model. For investors, this wasn't merely a contract, it was a stamp of validation. Gemini is good enough, stable enough, and scalable enough to be trusted by one of the most demanding companies on Earth. And the market reacted immediately. Alphabet shares were up around 1.7% at one point, reaching the $334 area and setting a new high before cooling off. But the important point isn't a single session. The important point is the message. Alphabet is returning to the center of the AI race through alliances that few people thought were possible. At a deeper level, this is also a story about confidence in quality. Gemini 3 has been viewed positively, adding pressure on OpenAI in a context where some users say GPT-5 hasn't felt like the leap they expected. In AI, quality isn't just benchmarks. It's the assurance that businesses can deploy for real, pay for real, and bet products on your platform. When Apple chooses Gemini, it's indirectly saying, this system is mature enough. That's why investors see Alphabet very differently than a year ago. Within the Magnificent Seven, Alphabet has been the biggest surprise over the past 12 months, not only because the stock has surged, but because it's expanding beyond the advertising model. There's even a symbolic detail. Berkshire Hathaway, Warren Buffett's firm, was mentioned as rare capital, reinforcing confidence that this story has a foundation, no mere short-lived burst of excitement, but a transition backed by clear results. The second piece, the Android ecosystem and Samsung. An earlier report said Samsung plans to double the number of mobile devices with Gemini-powered AI features this year. Think about what that implies. Not a lab demo, but AI flowing directly into hundreds of millions of user devices. When AI is packaged with hardware and daily habits, it creates a loop. More devices, more data, more experiences, and ultimately more revenue. This is something standalone AI models struggle to create on their own without an ecosystem. But a big question remains: how does Alphabet make money from AI? This is where the third piece comes in. Google Cloud, the card that used to be underestimated. Google Cloud has been growing strongly, with Q3 revenue up 34%, and more importantly, unrecognized contract backlog reaching $155 billion. Backlog is a signed commitment that hasn't yet been counted as current revenue. It's like a long runway evidence that the momentum isn't a one-quarter accident, but a trend. Why does cloud matter so much? Because AI is an infrastructure game. To train and deploy models, you need GPUs, TPUs, data, networks, and data centers. And cloud is where Alphabet turns AI into a sellable product, delivering compute capacity, models, tools, and enterprise solutions. At this point, the fourth piece appears: AI chips. Google isn't just chasing the chip market, it has its own chips, TPUs, built for internal needs. Now Alphabet is opening the door. renting that chip capacity to others. When you rent out AI chips, you're selling raw power, the one thing every AI company is starving for. And according to an industry source, Meta has even discussed spending billions to use Alphabet's chips for data centers starting in 2027. Even if this is only a signal for now, it shows demand is rising exponentially. So what about the core business advertising? This is what many people forget. Alphabet doesn't live on AI alone. Its biggest cash machine, advertising, has remained steady despite economic uncertainty and intense competition. In other words, advertising is the baseline cash flow that lets Alphabet invest aggressively in AI without running out of breath. While many companies must burn cash to chase AI, Alphabet can invest and defend at the same time. This combination creates a new picture. AI is no longer a vague future vision. It is tied to cloud revenue, pushed into hundreds of millions of devices through partners, and fueled by advertising cash flow. That is an operating model. There's another psychological factor: legal risk. A US court ruling in September did not support breaking up Alphabet, allowing the company to keep control of Chrome and Android. You may think legal issues are distant, but to markets they are a real risk. When risk declines, valuations often expand. And in the $4 trillion story, the easing of legal clouds was also a tailwind. Now, put everything on the table. Apple uses Gemini. Samsung ramps up Gemini devices. Cloud grows 34% with $155 billion in backlog. TPU chips are being rented out and may even be ordered at a massive scale by Meta. Advertising stays steady. Breakup risk recedes. What's the result? Alphabet becomes the fourth company to reach $4 trillion after Nvidia, Microsoft, and Apple, and even surpasses Apple in market cap for the first time since 2019, becoming the world's second most valuable company at the time the article was written. But the most compelling story isn't the 4T number. The story is repositioning. Alphabet was once seen as an advertising giant trying to catch up in AI. Now it is telling the market, we have the model, the infrastructure, the partners, the devices, and the cash flow. And when investors believe that, valuation reflects not only the present, but power in the future. So how should you view $4 trillion? Don't treat it as a finish line. Treat it as a signal that the AI race is shifting phases, from showcasing models to deploying at scale. Whoever has the infrastructure, the ecosystem, and the cash flow has the advantage. And the final question, the most important one, is, can Alphabet keep this pace? If Gemini continues to prove its quality, if cloud sustains its speed, if it turns TPU into an industry standard service, and if advertising remains strong enough to supply fuel, then $4 trillion is only a milestone on a long road. But if one link breaks, partners change course, legal risk reverses, or AI doesn't translate into revenue, the market will remind you, high valuations always come with high expectations. Like and subscribe so you don't miss our next videos on economics.